Are you a subcontractor in the construction industry? Are you sick and tired of seeing 20% of your hard-earned money just vanish from every single invoice? Well, that's the reality for so many people under the Construction Industry Scheme, or CIS. In this guide, we're going to show you exactly how to get that cash back in your business where it belongs by getting gross payment status.
And just so you know, all of this detailed info comes straight from the CIS experts over at Pro Tax Accountant. These guys live and breathe this stuff every single day, so you're getting top-tier advice from people who are really on the front line.
So here's what we're going to break down for you. We'll kick things off with the big cash flow headache that CIS causes. Then we'll get into what gross payment status actually is and why it's the perfect fix. We'll spend a good chunk of time on the 3 crucial tests you've got to pass, then how to apply, and, just as important, how to keep your status. And finally, we'll point you in the right direction to get some expert help.
Okay, first things first. Let's really dig into the problem. Because to understand just how good the solution is, you need to feel the pain that thousands of subcontractors face. We're talking about a constant, major drain on your working capital, all thanks to these standard CIS deductions.
Let's put a real number on this, shall we? Imagine your London-based business invoices for, say, £150,000 worth of labor in a single quarter. Under the standard rules, the contractor has to hold back 20%. That's a massive £30,000 of your money that's just sitting with HMRC. Money you can't use to pay your staff, your suppliers, or invest in new gear. That, right there, is the CIS cash flow trap.
So what's the deal with this 20% deduction anyway? Well, it's really important to get this straight. CIS is not some extra tax. It's basically an advance payment towards your final tax and national insurance bill. HMRC brought it in to fight tax evasion. But for honest, hard-working businesses, it can definitely feel like you're being penalized.
And this chart just lays it all out crystal clear. If you're not even registered for CIS, big mistake, you lose a whopping 30%. Get registered, and that drops to the standard 20%. But just look at that third bar. With gross payment status, the deduction is 0. Zilch, nothing gets held back.
Okay, so how do we get to that beautiful 0% bar? Well, that brings us neatly to the solution, gross payment status. Let's dive into what it is and how it puts you back in control of your own money.
In a nutshell, gross payment status, or GPS as it's often called, is HMRC giving you their seal of approval. It lets you get paid in full, with no deductions at all. It's basically a certificate of trust, showing everyone that you're a solid, compliant business that can be trusted to handle its own tax affairs.
And this just shows you the night and day difference. On the left, without GPS, your cash is stuck in limbo with HMRC, and you've got a long wait to get it back. But over on the right, with GPS, 100% of that invoice value hits your bank account. You are in the driver's seat, managing your own cash and paying your tax bill when it's actually due.
The benefits here are honestly a game changer. The immediate one is a massive boost to your cash flow. You also get way better control over your financial planning. And, don't underestimate the credibility factor. Having gross status tells main contractors that you are a serious, professional, and reliable business to work with. Okay, so you can see the upside. It's huge. But how do you get this coveted status? Well, HMRC sees GPS as a privilege, not a right. And to earn it, you have to pass their strict 3-part checklist.
Every single person or company that applies has to clear these 3 hurdles: the business test, the turnover test, and the big one, the one where most applications fall flat, the compliance test. Let's break each one down.
First up is the business test. And the good news is, this is usually the easy part. You just have to prove to HMRC that you're a real construction business, operating mainly in the UK, and that you have a proper business bank account. For most of you, this is a simple box-ticking exercise.
Next, we have the turnover test. HMRC needs to see that you're a business of a certain size. So for a sole trader, your turnover for the last 12 months must be at least £30,000. For partnerships and limited companies, it's £30,000 for each partner or director, or £100,000 total for the business. But that's not all. Here's where most people go wrong.
Listen up, because this is absolutely critical. The turnover they're looking for is your net construction turnover. That means you have to take out the cost of materials and any VAT from your calculation. So if you invoiced £50,000, but $15,000 of that was for materials, your turnover for this test is only $35,000. Getting this wrong is the #1 reason applications get rejected straight away.
And now for the toughest hurdle of all, the compliance test. HMRC will go through your tax history for the last 12 months with a fine-tooth comb. You need a perfect on-time record for everything: your CIS returns, PAA, self-assessment, or corporation tax. And from April 2025, they're including VAT in this check too. Stay with me. This next point might come as a surprise. And they are not kidding around with this. This quote here, it's from a real business owner who got rejected. The reason? A single late corporation tax payment. It just shows you how high the bar is. One slip-up can be enough to get a no. Okay, there is a tiny glimmer of hope. HMRC might overlook a few very minor slip-ups, like a couple of payments that were less than 14 days late. But, and this is a big but, you absolutely cannot rely on this. It's their discretion, not a rule. The only safe bet is to aim for a completely spotless record. So if you've gone through the 3 tests and you're feeling confident that you tick all the boxes, that is brilliant news. Now let's quickly walk through how to actually apply. It's pretty straightforward, but you've got to get it right.
You've got 2 options. You can apply online through your government gateway account, which is definitely the fastest way to do it, or you can do it by post with a paper form. The form you need depends on if you're a sole trader, a partnership, or a limited company. Just make sure you have your unique taxpayer reference, or UTR, and your national insurance number ready to go before you start.
Getting that letter from HMRC saying you've been approved? What a great feeling. But your work is not done. This isn't a one-and-done kind of thing. Getting approved is just the start. Now you have to keep it, year in and year out.
This timeline shows you that compliance is an ongoing job. After you get approved, HMRC runs an automatic check on you after just 6 months. And after that, you'll be put through an annual automated review. It's officially called the Tax Treatment Qualification Test, to make sure you're still playing by the rules.
So what happens if you fail one of these reviews? Well, for smaller issues, HMRC will usually give you a 90-day warning to get your house in order. But, and you need to be aware of this, for really serious problems, like if they suspect fraud, they now have the power to cancel your status immediately. No warning, no notice period.
And the consequences of losing your gross status are no joke. You'll almost certainly be banned from reapplying for a full 12 months. Just think about that. Going from getting 100% of your money right back down to 80% for a whole year. That kind of cash flow hit could be devastating for a business.
Phew, we have covered a lot of ground here, right? From the problem and the solution to the nitty-gritty of the tests and the traps you can fall into. So let's quickly wrap up with the key takeaways and talk about your next steps.
So, to recap the most important bits, gross payment status is the key to stopping those 20% deductions and supercharging your cash flow. To get it, you have to pass the business, turnover, and the super important compliance tests. A perfect tax record is non-negotiable, and you have to keep it that way to pass the annual reviews and hold on to your status.
Now, it's really important for me to say that the information we've shared here today is for general guidance. It's not a substitute for professional advice that's tailored to your specific situation. Before you make any big financial decisions, you really must speak with a qualified expert, like the team at ProTax Accountant.
If you're ready to take back control of your cash flow and see if you qualify for gross payment status, or if you need help with any other tax matters, get in touch with the experts at ProTax Accountant. You can call or WhatsApp them or drop them an email. And hey, if you found this helpful, make sure you subscribe to their YouTube channel for more great stuff like this.
I'll leave you with one final thought to chew on. Are you okay with leaving tens of thousands of pounds of your own money on the table every single year? For a deeper dive on everything we've talked about, go and check out the full article on the ProTax Accountant blog. Thanks so much for your time.